Hello, everyone. Welcome back to another episode of our weekend market analysis. We are setting up to dive deep into the gold market as we prepare for the new trading week. So let's buckle up and get right into the business. Last week, we saw gold show signs of what majority call the beginning of a potential retracement, as many investors dubbed the gold commodity for the US dollar following Donald Trump's election victory. In fact, there is a growing anticipation that his policies could drive economic growth and inflation, which has helped bring the US dollar back into the spotlight despite the Fed's recent dovish stance. Looking back, here was our trading setup prior to the beginning of last week. We witnessed the first half of the week go through a consolidation phase within a clearly marked structure. Remember, this was what we were looking at. We had our key level right around the 2740, and Monday and Tuesday's trading session saw price continue to oscillate around our key level for that week, reflecting the market uncertainty ahead of the US presidential election. While this brought a few challenges as we took a couple of losses, we were able to secure a solid sell position as price finally broke down off our key level at the 2740 area, recouping the loss we incurred and scooped in over 1,000 pips from multiple sell entries. If you are interested, I've left a link to the breakdown of each of our entry points in the description for some educational insights. So, at the moment, the overall sentiment appeared to have shifted as traders weigh the potential inflationary impact of Trump's policies, and with the Fed chairman, that is Jerome Powell's recent comments leaving monetary policy decisions wide open, it is clear that the upcoming US inflation data will be a key focus for market participants. So, the big question at this point is how can we best prepare ourselves for another week of opportunity in the gold market? As always, we are going to be going over the key level to watch, the trend direction, and structural patterns that could set up trading opportunities, and of course, give us an insight into how market participants are behaving ahead of this event. But before we proceed, I want us to understand that this analysis is educational, not financial advice, so be sure to consult a professional before making any investment decisions. All right, let's get into the chart and see what's on the table for the week ahead. So my first point of contact for this week is going to be on the daily time frame where I took into account the character of price action since the month of February. That's about 10 months of historical data, and it is quite clear that the market is strongly bullish. As you will see, price action had consistently found higher highs and higher lows, resulting into a couple of ascending trend line for us. Now look at what I did after connecting the series of higher lows. You can see we have the first major ascending trend line on this one, while we have the second one right here. And of course, you know how we treat our ascending trend lines. As long as price remains above this structure, we continue to maintain a bullish bias, looking out for patterns and structures that supports the idea of buying this asset. Now, in addition to that ascending trend line, I have my key level for this week at the 2680, a level which has been consistent with, or let me say, it has played a significant role in determining the direction of price action since the later part of September. You can see here at some point it was serving as a resistant line, a selling niche, before we saw price broke out of that structure here in the mid-month of October. And in fact, this breakout here led to that historical move to the upside at the 2790. Now, the last couple of weeks witnessed price action drop, which could be considered to be a retracement of that impulsive move, as you will see here. And interesting enough, we saw price action drop back into the key level, which interestingly lines up with that ascending trend line. And as soon as price got into the trend line, we saw a bullish momentum begin to build up from that particular area, giving us a beautiful confluence to focus on ahead of the new week. Now, with the situation we have here, you would agree with me that we are at a crucial juncture where, depending on how market participants react to this area at the beginning of next week, will determine if we will be continuing the uptrend move or price may likely break down that key level and the ascending trend line to incite a temporary sell off. Now, in order to help us navigate this confluence, I have a simple trading setup on the 4 hours time frame. But before we go into the 4 hours time frame, it's important that we keep tabs with the fundamental factors that will be influencing the sentiment in the market next week. Now, this economic data often manifest on the chart in technical patterns and price movement, and by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart. So, based on the asset we are monitoring for this week, we are going to be focusing on high impactful event from the United States economic docket. Now, the first impactful event for next week is coming in on Wednesday, that is November 13th, and this is the Consumer Price Index. This is one of the major events that majority in the market will be looking forward to, as it will be influencing monetary policy decisions and, of course, impacting the value of the US dollar. Now, for those who don't know, the Consumer Price Index measures the average change in prices of goods and services in the last 30 days, indicating the inflation level within the US economy. Then fast forward to Thursday, November 14th, we are going to be looking at the Producer Price Index, a data that measures the average change in prices that producers receives for their goods and services. So it's also considered to be a key indicator of inflation at the wholesale level. So this is one event we also going to be looking forward to. Then on that same day, we will be witnessing the Fed chairman's speech, an event which significantly will influence how the market sentiment will play out, as key players are expected to closely analyze what the Fed chairman's remarks will be, especially in terms of insight into the future interest rate decisions, economic outlook, and the Federal Reserve's policy direction. Then finally, on Friday, November 15th, we are going to be looking at the retail sales data, an economic indicator that measures the total receipt of retail sales stores, representing consumer spending as well. So these are the major events we will be looking forward to next week. And of course, the anticipation of this event has a way of influencing how market participants will behave, which we shall be seeing reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where we do have a simple trading setup that will help us understand how market participants are behaving, and of course give us an insight into how we can strategically position ourselves for the next move. So here on the 4 hours time frame, after taking into account the character of price action since the beginning of this month, I was able to identify a descending channel, as you will see, ever since price action tested that record high at the 2790. We can see price had consistently found lower lows and lower highs. So connecting these pivot lows, we can see we have the resistant line of the descending channel right here. And of course, when we connect the series of lower lows, we have the support line of the descending channel. Now, immediately price tested the support line of the descending channel right here on Wednesday, despite that strong bearish move following the result of the US presidential election. We saw sharp rejections of the support line. We saw signs that buyers were coming in, and this gave gold a sign of probably continue that uptrend move. But as soon as price tested the 2705, we begin to notice selling pressure as buyers found it difficult to break through the 2705 level. Now, from a technical standpoint, the behavioral pattern here shows that there is an indecision in this market after price dropped into that 2655 area. So, since Wednesday's trading session, it is clear that the market has been confined within the 2705 and the 2655 level to emphasize the prevailing uncertainty in this market. And of course, this may be as a result of the anticipation of the inflationary data, which is coming up next week, as major key players in the market may have stepped aside, waiting for this event to happen before placing any aggressive bets. So, as a result of this new structure here will be playing a significant role in guiding our trading decisions. Now, within this consolidation phase is our key level. Remember, we talked about this on the daily time frame. That is the 2680 level. And of course, you know how we treat our key level. As long as price remains above them, we'll maintain a bullish bias. But if price drops below it, we definitely want to start considering selling. So for me, buying the XAUUSD for next week will be above this key level. So if the new week starts with continued buy pressure above this area, I will maintain a bullish bias and looking forward to price breaking out of the 2705. In fact, if price breaks out of that structure, it would have breached and broken out of the resistant line of that descending channel, which will be the first time price will be breaking out of that structure in the last 2 weeks. A good signal to continue that uptrend scenario. So that is what I will be looking at to buy the XAUUSD next week. However, if we do have a situation where price breaks down and retests the 2680, while continued selling pressure persists below the structure, it will be a sign that buyers are losing momentum and it could welcome some short term selling opportunities. So, if we sell from there, price moves close to the support line at the 2655. That's about 220 pips thereabout. We move all stop losses, secure the position while we wait and see how the market will react to the support line at the 2655. If buy pressure resumes, it could trigger buying opportunities, and if this level gets broken to the downside, it could welcome more selling opportunities. So, this is what I will be looking at in preparation for next week. But trust me, I will be with you in the comment section of this video during the early hours of next week after monitoring the character of price action around our key level during the first 8 hours of the week, after which I will be giving us updates in the comment section. So, there you have it, my in depth analysis on the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.